Traders lose in the market probably not just because they don't know how to trade. They understand how to trade, but they don't understand how to get precise entry. They don't understand how to make good entries. They lose in the market. They understand technicals. They understand their bias. Their psychology is in check, but they still lose in the market, and they ask themselves why. It's because they don't understand how to get good entries. I trade MSNR combined with SLK. SLK is structural liquidity and key level. To get precise entry combined with SLK. And before I start, if you haven't watched my videos on the bias, make sure you watch, because it might be a little bit confusing if we proceed with this video. Make sure you watch it to understand more better, and this will help you understand this more better, and this will help you a lot. Always understand, anything I am sharing here works. It's something I have tested myself. So I am going to make your journey short if you trade MSNR. So let's dive in. And here, all these 4 things that I have written is what I use every blessed day before I execute any trade. I need to see these 4 things. This is when discipline comes in. Everything I am teaching here, I will emphasize on key things. If you are wise enough, make good use of it. And we are going to start with bias. Whenever you want to execute, whenever I want to execute, I make sure I understand the higher time frame bias. What is the higher time frame telling me? Are we bullish? We are bearish? You need to know where price is going for that day. It's either you understand if price is bullish or bearish for that day to save yourself from unnecessary losses. And you need to understand how to mark out valid key levels. This key level will help you push price to that direction. And how do you get your bias? I use 4 methods, but I'm going to show just 2 methods, which is the most important, and it works perfectly. We have the rejection method, which is this, CRT method. The rejection method is when price rejects a key level, and whenever price from a key level, you need to see a break of structure. And also for the CRT, is when price take out the previous candle, it can either reject from a key level or just taking out a previous candle. It must not necessarily reject from a key level. If it rejects from a key level, that's an added advantage. But if it does not reject from a key level, so far it takes out a previous candle, it is valid for you to trade if you have a break of structure on the 4 hours or the 1 hour time frame. This is just a recap. And these rules I am giving you, before we go in, these rules are very important. Bias is very important. And key levels are also important. And for the key level, I would emphasize on this. Your key level should either come from this, a QM. Your key level should come from a QM. We have a break of structure on the 4 hours. Your key level should come from the QM, the apex, or an OCL. If you have an OCL right here, you mark out your key levels from this. These are the most powerful key levels you can trade after you have a break of structure like this. After you have something like this. This is just a recap. If you understand this, you'll be in the safe side. Whenever you have a bias like this, you can now trade continuation, which is normal. You can trade continuation to the upside, something like this, because you already know the bias. You can now pay attention to daily key levels and 4 hours key levels to trade the continuation to the upside or to the downside. You can only switch your bias when you have a new storyline or a new bias. Bias is the key. Bias is just the key. And if you mark out valid key levels, then you are good to go if you can mark out valid key levels. And your valid key levels would come from this QM, the apex, and an OCL. If you have an OCL here, if you haven't watched my past videos, make sure you watch it so you understand better. After you get a rejection, you wait for a break of structure on the 4 hours time frame or the 1 hours time frame to confirm this bias. After you confirm this bias, we have done number 1 and we have done number 2. Number 1 is the bias, and number 2 is to confirm the break of structure on the 4 hours time frame or the 1 hours time frame, if that bias is bullish or bearish. We are done with number 2. Number 3, you need a key level. You need a key level. Where should your key level come from? Your key level should come from the 4 hours time frame. And if you are confused with your key levels, if you have multiple key levels and you are confused which key level to use, go to the daily time frame and pick your key level from the daily time frame. I cannot overemphasize on this because this is very, very important. If you mark the wrong key level, you are going to lose. Mark your key level from the 4 hours time frame or the daily time frame, not 1 hour's time frame. I said no 1 hour's time frame for key levels, no 2 hours time frame for key levels. Go to the 4 hours. The more the higher time frame, the more stronger your key level will be. After you get your key level, you are going to go to the 4th step, which is refining that daily key level or the 4 hours key level. I think let me just put here daily key level. Now let me just put daily or daily key level or daily. So after you get these key levels, you are going to refine this key level into a structure. Any of these structures, we have the structure type 1, we have a structure type 2, and we have a structure type 3. And how do you treat these structures? These structures must have these criteria. I repeat, a sweep of liquidity, structure type 1 must have a sweep of liquidity, a break of structure, and a first pullback, which is liquidity, and then you can enter from the key level that you refine from the higher time frame. It must be below that key level you are going to refine, must be below this liquidity. This will help you just filter liquidity automatically. If you use the higher time frame key level, it will automatically filter and give you liquidity to use, and it will filter the wrong key levels. It will filter wrong key levels and it will give you the best key levels to use. So the first, structure type 1, I'm overemphasizing on structure. You need to understand structure. And if you don't have any ideas on structure, make sure you comment so that I will make a video on structure. I'll do a video on structure. Now, after we have a sweep of liquidity, we have a break of structure, and then we have a liquidity. That should be the first pullback. And second structure, this is the structure type 2, is you need to have a sweep of liquidity, and market will engineer an internal liquidity. Market will engineer internal liquidity before breaking structure to the upside. This will act as a liquidity, and you automatically have a key level below this liquidity. You will automatically have a key level below this liquidity. This is a structure type 2. Structure type 3, which is the continuation structure, you use this mostly for continuation. Also, it can still be found during your reversals. This structure type 1 and 2, you will mostly find them whenever you see a reversal. Whenever a reversal is coming, most of the time you are going to find this structure type 1 and structure type 2. Whenever a market is about to reverse, you have this structure type 1 and structure type 2. Because when we have a sweep of liquidity and a break of structure, this low is protected. This low is protected. A lot of people trade just structure and they are good because they understand bias. If you don't understand bias and you want to trade structure, then you will experience series of losses if you don't understand bias. Bias will help you trade this the right way. It will help you trade this the right way. Because you will always find these structures in the opposite direction. This is to lure you to execute the wrong setup. But if you understand what is bias telling you, you will execute these structures the right way. Now let's go to structure number 3, which is a continuation structure. It's when price disrespect a key level or breaks a structure and leaves a fair value gap. When price, with some people call this breakout block, you can call it breakout block. You can call it breakout block. Whenever price disrespect a key level, leaves a fair value gap, it must have a fair value gap. If there is no fair value gap, that structure is invalid. You must not execute. Wait for the next setup. After you see a fair value gap, wait for a liquidity, either price engineer liquidity, or you have a pullback like this, and then you can execute from the breakout block. And this breakout block, a lot of people are always confused of where should I put my stop loss. If you don't know where to put your stop loss, you can wait for confirmation. You can wait for a confirmation on the lower time frame, and then you execute, which we are going to dive into more examples, and I'm going to show you how you can execute this in real market. So let's go to the chart and do some examples, and I'll start with GBP USD. Let's go to the daily time frame. And okay, now this is the daily time frame. Can you see? This is the daily time frame. We had a rejection from this key level right here. The first thing you need to look on the higher time frame is look for rejection or CRT. Even though we had both here, which is more advantage to you, we had both CRT and rejection at once. So after price rejected this key level, it also gave a CRT, which made it more powerful for us to execute. After price rejected, it took out this previous candle, and for you to execute, if you want to take TP, make sure you target the 50% of this candle, but we know our overall target should be this high right here. Should be this high right here. This is our overall target. This should be our overall target right here. Then 50% should be your first target. So after you have this rejection, you move toward, which is a step 2, you move to the 4 hours time frame or the 1 hours time frame to confirm a break of structure to the upside. Now if you go to the 4 hours time frame, we had a break of structure. Can you see? We had a break of structure right here. See, price closed above. We had a break of structure, and now you would say we have multiple structures on the 4 hours time frame. Yes, that is why you need to use the daily time frame when you have multiple key levels like this. We have multiple key levels on the 4 hours time frame. What do? You go to the to daily time frame, and you will see just either 2 key levels or 1 key levels to use. Now let's go to the daily time frame. Now on the daily time frame, this is all we had. This key level right here. Can you see this OCL? Now we are going to refine this key level until we see any of those 3 structures. If we don't see any of these 3 structures on the lower time frame, like the 1 hours time frame or the 30 minutes time frame or the 15 minutes time frame, then this setup is invalid. Now let's go to the 2 hours time frame to see. On the 2 hours time frame, we can see this is a key level right here. Now let's go to the 1 hours time frame. Now we had, can you see, this is the structure we talked about. We had a sweep of liquidity right here. Can you see? We had a sweep of liquidity right here, and we had the break of structure right here. We had the break of structure right here, and we had the structural liquidity right here. After a break of structure, we had our structural liquidity. Now our entry can come from this key level right here. This is a breakout block with a fair value gap. You see, this is a breakout block with a fair value gap. Can you see the fair value gap? And this is liquidity. A breakout block and a fair value gap. We have a sweep of liquidity, we have a breakout structure, and we have the first pullback, and this will now act as what? As a liquidity. Now we have the fresh key level right here, so you can execute from here. You can execute from here, and never you use tight stop loss. Put your stop loss where necessary. You can put it below this, and you can target this high right here, which is the 1:4. This is your first TP, and your overall TP should be here because you already know where price is going to. You already know your direction where price is going to. Can you see? You can put your stop loss right here so that if price maybe want to come to this other key level right here, you'll still be in the trade. So you also need to use your brain and stop using tight stop loss. Stop using tight stop loss. Now let's since we already know the direction, let's trade the continuation. Now how do we trade the continuation? We have this here. Okay, you see we have this here. This is a breaker block. Why did I choose this breaker block? Because this breaker block has a fair value gap and price disrespected this with volume. Can you see the volume? Price disrespected this with volume, and this key level is fresh. And how do we execute? We need to refine this key level into a structure. We need to refine this into a structure. And if you want to trade continuation like this, you can use either confirmation, because you would be confused where to use or where to put your stop loss. Can you see? Since you be confused where to put your stop loss, you can use confirmation entries. Let's see. You can use confirmation entries. So how do you use confirmation entries? You now go to the lower time frame. On the 2 hours time frame, it's still a breaker block which you can refine into this breaker block right here. You see, this is a breaker block. You can refine to this breaker block right here. It broke structure, and we are going to look for liquidity. Let's go to the 1 hour time frame. Now on the 1 hour time frame, price engineered liquidity right here. Price engineered this liquidity, and you can now wait for confirmation. Let's go to the 15 minute. After price tap into that key level, look for a structure and then you buy. Let's go to the 15 minute if we can get a structure. After price tap into that key level, this is a key level that is coming from the 4 hours time frame, and you can see we had a sweep. Can you see a sweep of liquidity, and we had a break of structure right here. After we had a break of structure, price engineered liquidity, which acts as a first pullback, and then you can enter from this breaker block right here, and you can target whatever thing you want to target, because we already know where price is going to. We know price is not going to take out this low. We know very well that price is not going to take out this low, because this low is protected by taking out this low and breaking structure to the upside, and you can continue buying to the upside. Can you see? Now imagine you selling, like for example, you are trading against the trend. This is a sweep of liquidity right here. You can see this is a sweep of liquidity right here, and this is a break of structure. Can you see? This is a break of structure right here, and this structure did not last for long because the direction was bullish. You see, we had a sweep of liquidity, we had a break of structure, and price took out this first pullback, tap into this key level, and then sold to the downside. It did not last for long because this was a bullish market, not a bearish market. Now let's do another one. Now this is a continuation on GBP USD. You can see here market broke structure right here. Now you have multiple key levels. Which one would you use? We have this key level right here, and we have this key level right here. Mark out those key levels on the 4 hours time frame. You need to go to the lower time frame and refine this key level into a structure. Any of those structures I thought. Now let's go to the lower time frame to look for a structure. Now you can see this structure is already aligning. This structure is already valid, and the price is already buying from this key level, and it has given a confirmation entry already to continue the buy to the upside. Now you can see on the 1 hours time frame. Let me go to the 1 hours time frame. You can see here this low is protected because it took out the previous candle and then it broke structure to the upside. It took out the previous low, broke structure to the upside, and gave us an internal liquidity. So we are going to go for the one below. This key level above is invalid because we have a clear structure below. Can you see? We have a clear structure below. This is a structure type 2 because price engineered internal liquidity before breaking structure. This is structure type 2. This is an example of structure type 2. This is structure type 1. This is structure type 3. This entry is structure type 3, and then this the third one is structure type 2. You see, if you understand just these 3 structures, you are going to be good. You are going to be fine if you understand these structures combined with buyers. Can you see now? Price just gave us a confirmation entry, and price can continue pushing to the upside from here. And by now, it should have been in profit. The stop loss just below here, and the target is here. You always go for the fact TP. This is what we call fact TP, because price move from internal liquidity to external liquidity. Price move from internal liquidity to external liquidity. So your TP should be here. Go for this. Go for this first. If you want to, since we know our overall TP is here, that price need to take out that daily candle. We know, we had a CRT on the daily, and the overall target is here. But always make sure you go for this anticipated TP. Now price is already almost 1:3, and we are expecting price to either continue to the upside and hit this target before maybe we can wait for maybe a sell or any other buyers. Now let's see AUD USD, if we can get some examples. Okay, now this is AUD USD. Let me see. Yeah, I think I analyzed this trade, even though I did not execute this trade, but I did analyze this trade. And also this one, you see, I took this trade. Let me just break this down. Let me go to the daily time frame. You can see on the daily time frame, let me delete all of this. Okay, now on the daily time frame, you can see we had a rejection from this key level right here. This was a key level. We had a rejection, and price rejected this key level, and we had a break of structure on the 4 hours time frame. You can see we had a break of structure on the 4 hours time frame. Now you are confused. How will I choose the right key level here to buy from? Don't be confused. When you have multiple key levels like this, make sure you go to the daily time frame. You'll get just a single key level that you can use. Now let's go to the daily time frame. On the daily time frame, we have this OCL that was disrespected with volume. Can you see? We had this OCL that was disrespected with volume. I'm going to mark this OCL that was disrespected with volume, and let's refine these key levels on the lower time frame. You can see on the lower time frame, it's a breakout block, but I need to see a structure, so I need to go to the lower time frame, like the 1 hour time frame or the 30-minute, if possible the 15-minute. I need to see a clear structure. Now let's go to the 1 hour time frame. Now on the 1 hour time frame, we have this key level that we can refine to this OCL right here. We can refine to this OCL, but I'm not satisfied enough. Let me go to the 30 minutes time frame. On the 30 minutes time frame, nothing clean. We go to the 15 minutes time frame. Oh, wow. The 15 minutes time frame, we have something like a structure. And if voila, this is it. Now you can see this structure on the 4 hours time frame is already a breakout block, so you can wait for confirmation. For breakout block like this, for key levels like this, you can wait for confirmation. This is a breakout block, and it also has a fair value gap, so you better wait for confirmation, because using breakout blocks like this, you won't know where to put your stop loss. So it's better you just wait for a confirmation around that key level, and then you wait for frame break. Now let's see, this is a key level. You can see on the 2 hours time frame, it's a breakout block. It's more clearer here, and we have a single candle liquidity. You see, you have a single candle liquidity, can you see, with a fair value gap. So you can wait for confirmation and you can execute, because this is a breakout block with a fair value gap. These are powerful key levels you can buy from. So you can wait for confirmation. Let's go to the 15-minute. If we can have a confirmation, a sweep of liquidity. Exactly, you see, we had a sweep of liquidity, we had a break of structure, and after we had a break of structure, we had a break of structure right here, and you can see we had liquidity. This was a liquidity, and you can enter from this breakout block right here. You can enter from this breakout block right here, and boom, this is another entry. The stop loss should be at the right place. I always insist, don't go for tight stop loss. Don't follow what you see online. Put your stop loss where it needs to be, at the right place, and you can target something above here. Can you see? This is another one. And also I got another entry here. I got another entry that was yesterday. This was a continuation of that trade. You can see I got this entry. This was a key level on the day, on the 4 hours time frame, and I needed to refine this key level into a structure. Now let's go to the lower time frame to refine this. Now this fresh key level, let me go to the 1 hours time frame again. This is a fresh key level. Now let's go to the 30-minute. On the 30-minute, what do we have? We have a sweep of liquidity. Can you see? We had a sweep of liquidity, and we had a break of structure. I had a break of structure right here, because we used body to body break. when you're trading MSNR, we use body to body break. And on a 15-minute, can you see we had everything I need? This was a liquidity, but this liquidity was very, very far, so I needed to use something around here. I needed to use this as my liquidity, this single candle. I know you won't understand this, but this is another form of liquidity I use, because this key level was fresh. Market did not mitigate this key level, so this key level was still fresh, and that is why I took my buy from here. Let's see, we had a sweep of liquidity, we had a break of structure, we had liquidity, and then boom, your entry should come from here. My anticipated TP, that is what I always see. Don't overdo. Target your fact TP. Always target your fact TP, and always put your stop loss at the right place. You will be safe. Now imagine I did something like this. Imagine I did something like this. Now market just changed direction, because if you go to the daily time frame, I think we just switch direction. Yeah, exactly. Now when market wants to switch direction, anything can happen, and market can switch direction at any time. You can see we had a daily reject daily, and let's go to the 4 hours time frame. On the 4 hours time frame, we had a break of structure to the downside. Can you see? We had a break of structure to the downside. Now I'm bearish on this pair. I am bearish on this pair because the buyers just switch. So I can start looking for opportunities to sell. You see, I can start looking. Okay, now let's check another entry on Euro USD. Let's see if we can get another entry on Euro USD. Okay, yeah, okay, let's see. Now on Euro USD, you can see we have a rejection, and also we have a CRT. What's this? And also we have a CRT right here. We had a CRT here. Price took out this previous candle, and we can either target the 50% of the CRT candle, the candle, or we can target the extreme of that candle, the external. Right now, after price take out this previous candle, you haven't confirmed if you are bullish or bearish yet. You need to confirm this by moving to the 4 hours time frame or the 1 hours time frame to confirm a break of structure. And this CRT must not necessarily reject from a key level. So far you have a CRT, market taking out the previous candle. If you can have a break of structure on the 4 hours or the 1 hours time frame, it's valid for you to buy. Now let's go to the 4 hours time frame and see what we have. Now on the 4 hours time frame, the break of structure right here. We had a break of structure right here. See, price broke structure. And like I said, how do you mark out your key levels? Your key levels must come either from an right here, which we do not have, or your M, or the apex, right here. This is the apex. Now we are going to refine this key level, the one that has a valid structure, a sweep of liquidity, a break of structure. Then we are going to go for that key level that has a liquidity and all the rest. But if that key level is not fresh on the lower time frame, do not use that key level if it is not fresh on the lower time frame. Now let's check the 2 hours time frame. Now the 2 hours time frame, I don't see any clean key level right here, which I'm going to refine into this QM right here. I can refine to this QM right here. And also we have the apex right here, right? You see, these two are together. These two are together. Let me delete this. These two are together. And also let's refine on the 1 hours time frame to see. On the 1 hours time frame, you can now say, okay, this QM, if you can check this QM is already mitigated on the 1 hour time frame. Can you see this QM? After this candle closed inside, we had market mitigated this QM, which means this QM is no longer valid. That is the reason why you are going to go for what? This apex. And what do you have? We have a sweep of liquidity, and we have a break of structure right here. After we had a break of structure, we had structural liquidity right here, a fair value gap, and a fresh point of interest, which makes it a valid point of interest for us to buy from. See, you can buy from here, and your stop loss right below here. Can you see the stop loss right below here, and you target the external, which is here. You see the 50% of that candle. You see that's the 50% of that candle. You target this. You can see you can target this. So after you get this, you must understand. Let me just do a recap. You need to understand the bias, how to mark out the key levels, and to refine that key level into a fresh point of interest on the lower time frame and into a structure. Any of those structures I mentioned, you can use that. So if you love this video, like and share, and if you have any question, anything you don't understand, you can ask in the comment section and I'm going to answer you. Thank you and peace out. One love.